meaning each candle represents day, as I've been told you. So how to use it now? How to use the 9 moving average? What you do? You go to indicators. That's the way people that don't know about trading view. That's why I put the class for you. I teach you step by step how to use all those tools back there. Now, you go to trade indicators. You look for moving average EMA. That's why we call it EMA. We have what you call moving average exponential, and we have moving average simple or simple moving average. Both of them are similar, are the same. But myself, most people like to use the exponential because the exponential is stronger. I'm going to use the exponential first. We click on it. That's the way you click on it, and it's already been added to your chart. So what is a moving average? It's like a line. It's a line that you add to your chart. I'm going to add the 9 moving average. And thereafter, we're going to talk about the 21, 9 and 21 together. But we're just going to talk about the 9 moving average first. I just click on moving average exponential, and it's already been added to your chart. I just close the box. So this is the moving average, as you can see there. This blue line, that's the moving average. The blue line you see there, that's the moving average. Now, how the moving average react, how the moving average done on your chart. It's very simple. The moving average is a line, as I just told you, we added there. So whenever the moving average, the line is under, whenever the line is under the candles, we call the candles price. That's why, and I forget to tell you that, we have, when people trade, we have what you call the line moving average, and we have candlestick. But most traders like to use candles, because candles is easier for you to read, is a price action. That's why you can see whenever the candles go there, you can see the wick there. So most traders, me myself, I like to use candlestick because it's better and it's easier for you to read those candles. That's why people don't use the line most of the time. They use candlestick. That's why candlestick is much easier for you. I'm gonna repeat again. Most people like to use candlestick than line because with candlestick, it has what we call price action there. And that's why we said the line, which is the moving average, is under the price. Whenever it says moving average is under the price, that means the moving average is under those candles. Candles represent price action or price. I'm going to remove everything. I'm going to teach you step by step to understand. We remove everything there. You can go to erase there. You erase everything. I'm going to put the 9 moving average again for you so you can understand and see where we take it. We go to indicators now, and then you add there where it says MAE or EMA, which is moving average exponential. You add it there, and it's already been added to your chart again. Now, and as I told you, how moving average act, that's called 9 moving average. Whenever the moving average, the 9 moving average, the line, which is the blue line, is under the price, which is those price here. Candles are the price, and the moving average, as you can see there, is under. So now, if you're gonna place a trade, what you're gonna do if you're gonna buy? Welcome, please, welcome everybody. Just share the live, let me know, and everybody. So if you're gonna place a trade, what you're gonna do from there? What you're gonna do, for instance, if you're gonna buy, whatever you're gonna do, option, or you're gonna place a trade, how you do it? As soon as you see there, as soon as you see the moving average is above, you see all this there, you can place your trade because we are, which shot we there? I think we are in Tesla here because Tesla was at 325.31. From there, you can place your trade. If you, for instance, if you're gonna trade, do something, you can buy from there. See, because all there candlestick is the moving average is on there. If I will place a trade myself at that time, what I will do, you can place your trade from that candle. And also remember, I'm going to tell you something. The moving average also represent what we call resistance and support. So what is the resistance and support? I'm not going to confuse you. We're just going to stay there. And the next time we talk about resistance is 2 line. we call that resistance, and the one in the bottom is a support. And when you buy, you always buy at the support. We close this one. We're not gonna go there. I'm not gonna confuse you. Now, if I will buy, because the moving average act also as a support. So since you see this candle, the red candle, as soon as you see the moving average is cross above this line, we're not gonna go back all the way there. You can buy there. Let's say you buy there from that candle, you see, because the support here, the green candle, been sitting at the moving average. This is the moving average, the blue line. You can buy from there if you want to. If you miss all those back there, let's say you miss this one, we're not gonna go back there. We're not gonna go back there. We stay there. What here? If you place your trade, you say you buy there because you know, as I told you, the moving average has to be under the price, which is now the moving average is under the price. You buy from there. Let's say you buy. Let's just put B there. You buy there, and then what you will do if you bought there, you can leave it. You can leave it because as soon as you see the move, because the moving average is still under the price. You see, you don't panic. Even though you see this green, you see this red, those red candle, don't worry about it. Because the moving average is still under the price. You see, candles above moving average. You see, those candles are still above moving average. You see, and then where are we gonna sell? You see, moving average still. And then if I will sell myself, as soon as you see now the candles get below the moving average, you can sell there. You see, because price there. Some people will sell back there as soon as it turn red back there. Some people can sell because remember, when you buy low and you sell high. So some people will sell back there, and some people will wait because what happened? While some people will wait because the moving average is still under the candle, and some people will take profit there because as soon as they see this red candle, they will get out. But at the same time, some of them will stay in the trade because moving average is still under the candle. But now, as you can see now, the moving average get a little bit. Some people will take it because it's getting low. You see, it's going down there. So what you will do, you still been in the trade as soon as the moving average still under, as soon as the moving average still under the candle. That's the way you use moving average. Moving average, I'm going to teach you now. I'm going to show you where the moving average is above. So it's two things. It's easy. So when you add or when you plot your moving average, as soon as the moving average is under the price, which is candle, so that's a good price. That's a good time to buy, and then you leave it. As soon as you see now the price go under the moving average, you sell, and then I'm gonna find a way where the moving average is being below, so you can understand. So let's go there. You see now, from there now, here, that's a good time to sell for people that's doing a sell-off. What happened there? That's a difference. Back there, you see, two different things. Let me just make it easier for you. Back there, you see the moving average was below the price. And when you move it, I'm just going to teach you where moving average is being sitting. And what there, you see the moving average now is above. It's two things. Whenever the moving average is above price, the stock is bullish. Because you know the stock has two things. It has what you call bullish and bearish. The stock has what you call bullish versus bearish. So what happened? The stock market been doing two things every day. It's a fight. It's always a fight between the bears and the bull, between bullish and bearish. Stock always going like that. It's always going up, always going like that. Stock market is always going up, down, up. Stock always going up and down. That's the way stock been doing every day. It's a fight between bull ends bear. That's the way it's being used all the time. Stock is been going all the time that way because that's the way it's being used. So what you can do there, you can always buy at the support. I'm gonna add it for you. You erase everything so you can understand. We add the moving average again, moving average, and it's been plotted for you. So as I clean the short, I just add it again for you. So what you see there, you see the moving average now is above the price. It's above. See? Is above. That means stock for this time was bearish. You see, price is below the moving average. See, the moving average now is above the price. So that was, for instance, if you were bought back there, see, if you bought, let me just put it a little bit better for you. You got two things here. You see, I'm going to show you two things. From there, we got a bearish. Let's just put this one as a bearish. Bearish. Because what happened? Because the price is below the moving average. You see, the moving average, the blue line, is above. As soon as the price is above, that's a bearish. And when the moving average is below, is bullish. Back there is bullish. I'm going to do this comparison for you now. See, there is bearish. Is bullish. Is bull. And what there is bearish. We have a bullish, bearish there. So how it works now? As I just told you, whenever the moving average is above price, which is price is what we call moving average, is like we call the candles. Those are the candles, are the price. Stock is bullish. Now, we're going to do two things. We're going to buy and sell. We're going to show you when you buy. For instance, right there, I'm just leave it like that. I'm not going to complete the shot for you. For instance, let's say you buy from there. Let's say that you bought from there. You bought there, you buy there. Because you see the moving average, which is the blue line, is above. You can buy, you place it, for instance, you place your buy there from that candle. You place, let's say you buy there, for instance. You can leave it. You can leave it because as soon as you see, as soon as you can see the moving average still below the price, you can be in the trade. You see what happened? You bought there, and then start get uptrend, going up. And then you speed, even though you see those red candles, you don't panic. Because moving average, you watch the moving average, and the moving average that you've been placed still below the price. So what you will do after you bought back there, you can be in the trade. You can still in the trade because stock is going up. When you're gonna sell now, you be in the trade still, and then now you're gonna sell what there. You can place a sell what there. You know why you're gonna sell there? You sell now. Sorry. So you're gonna be selling there. You know what? Why you're gonna sell? You sell there. You know why you're gonna sell? Because now the moving average being switched. The moving average now cross above. See, it's crossed all the way back there, and the price now is under. As soon as you see the price is under, you sell. If you've been in the trade back there, you buy, you bought back there, and then you can leave your trade because candlestick price is above the moving average, is above the blue line. And as soon as you see the blue line now is crossing above, we see there, from there, those red candles come up under price. So you see now the moving average is crossing above. The moving average is crossing above from there. And then you get out, you sell. And then if you do a sell-off, people that do a sell-off, you can sell, you can do a sell-off, and then you leave your trade because price is under. And then that's the way you do it. is two things. And then from there again, you can go back here. You see, after you've been sold back there, you see, because candles still under, and then moving away still above, you don't out if you sell there. And then you can come back to the trade. As soon as there you see the moving average back here now. You see how it works? The moving average here is coming back above now. See? The moving average now, you can buy back here if you want to. You see? From that candle. You sell from the top when I told because moving average is above. Now the moving average now is below. And then you can be in the trade. From there, myself, what I will do, some people will buy there. I can just out. I can be still out from the trade. If I get out from there, I will be stay out because what happened now is like the moving average sit in the middle. I don't like when moving average sit in the middle. We call that is sideways. You know, stock been doing sideways. That means stay one place. So me, myself, I will still, after I get out from there, I will stay out of the trade. And I come back from that candle right there. This is where I'm going to come back. I will be back. Let me see if I can change on the color. I will be back from this candle there. I can place a trade. I can buy back there. You see, because that round there, the moving average still inside, in the middle of candles. I will not come back. After I get out from there, I will stay out of the trade and I come back there. I will be back right there from there. Because now moving away still. Now the moving away is below the price and then I can leave my trade. I can leave my trade because you see now moving average the moving average is below. So I will still be in the trade after bought back there because I will buy there, and then moving away still below below the price, and then I will be still in the trade, and I will get out back here again because now moving average is a little bit cost too much red candle. If you understand, let me know. If you have any questions, just let me know. That's the way. I'm gonna, for people that don't understand, I'm gonna remove everything, and you got a blank shot now. See, that's the way moving average now. Now, I'm going to teach you about the moving average, the 9 and the 21, how they react together. Some people use two moving average. Some people use only the 9 moving average because if you're going to use one single moving average, you can just use the 9 moving average because one of the best, you just add it there and you have it. And then you just look for whenever the moving average is above, whenever the moving average is above, that means it's a bearish because stock is going down. If you do sell, you do sell off, and because you can stay. And as soon as the moving average now cross above, as you can see there, you get back to the trade. You buy there. You sell back because moving average is above, price is down. You sell, we call that bearish. Stock going down because moving average is above. And then now you're coming back to the trade, you bought there because moving average now is below. So it's two things. Whenever the moving average is below the price, you come back, you buy. Because price has to be above. Price has to be above. And then whenever the moving average now is above the price, stock is bearish. That's two things. Moving average is above price, so stock is bearish. Moving average is below price, so price is above them, stock market is bullish. It's two things. So if you're going to trade, you keep watching what you can do. Again, I like to explain well so people can understand. Repeat myself all the time. You just add. If you're going to do, you just add. Let me just do it simple for you again. You go back. You put your shot, it's a black shot. You go back, you says, let me add my indicators. You go there, and then I'm adding now my moving average, which is moving average exponential. You click and you add it there. And then you look, you say, wow, there's a good trade there. So what you will do at this time, Again, for people that just come up, what you will do at this time again, you can put the same shot that we have before. From there, what you do is two things. Moving average now is below price. Price is above. You can buy back there. You buy. You place a trade. And then you stay in the trade because your moving average is still below the price. And then your trade get higher. It's an uptrend. And then now what you will do, you look at the trade and you come back here. Now you see the moving average back there is crossed above. As soon as the moving average start crossing above, you can get out. Some people will get out from there, candle, or people that's been watching the moving average, they can get out from there because they have hope that the moving average is still going back up. But as soon as they see the moving average now is crossing above, they get out from there because now the moving average is above. It's been above the price. That's the way. And then all this thing, if you sell, if you do what you call sell-off, you do your sell-off back here. You do your sell-off back here, and then stock still going down for you. If people that do it sell-off, they make profit. Or you, if you bought there, you sell, you get out, and then you are out from the trade because all that cost here, trade is still bearish. Because moving average is above. You don't get back to the trade because moving average is out, is above the price. If you, for instance, if you bought there again, if you bought back there because the moving average is below the price, you still in the trade, you watch it, and then as soon as you see the moving average now is crossing above the moving average, you get out. You get out. But for people that's doing sell-off, they can do their sell-off from there too. And then because you bought there, and then you out, you sell back there, you took your profit there. When you took your sell back there, and then now what you will do, you stay out of the trade. If you're gonna trade, if you do only buy, you stay out because moving average still above the price. And then you can come back again. You come back there. You can come back there to buy back again. Because now moving average, but as I told you, from there, I will stay out, but some people will buy there, and you can always come back there. That's the best place to buy back. That's the best place to buy back because the moving average look better here. I will buy back there myself because what happened now, the moving average is below the price. I will still, after I bought back here, I will be still in the trade because my moving average is below the price and stock is going up. See? And I will get out from there myself and out. That's the way you can use your moving average. You manage it for the 9 moving. That's a review I just give you. Now we're going to do the 2 moving average. We're going to do the 9 and the 21. I'm going to show you how they work also together. Please share the live. If you like it, let me know. And if you have any question, just let me know. And then if you don't understand something, we'll be there for you. And also don't forget, we're going to talk about now, let me remove everything. I'm going to show you how to use the 9 moving average and the 21 at the same time. Whatever I give you that's here is free. This is a class. You know, this class costs so much money, but I'm going to give you free. If you stay with me, every week I will come back here like two times on Friday sometime and Saturday and Sunday. We'll be back every 2 times a week and give you some free time. By the way, go to my website. We sell some quits cup, standard cup for you. My website is www.ryfastores.com. I will put the link there. We have great t-shirt, we have hat, and we have some what you call some great yoga blocks for people that's doing exercise. Go to the website. It's ryfastore.com. Let me get some water. If you like this video, please let me know, share it, and like it. Welcome, Guy. Welcome, Combine. Welcome, everybody. So we share the like and some gift you if you would like to send me some gift there. I'm giving you everything there for free. If you understand, if you have any question, just let me know. We're gonna go back now to the 21 moving average. We're gonna put them together. I'm gonna show you how they went. We're gonna check three things in those trade when you take the trade. We're gonna add the 9 moving average, and we're gonna add the 21 moving average. So other than that, so when the 9 moving average, as I told you, is below the price, stock is bullish. When the moving average is above the price, so stock is bearish. They're doing the same thing, the moving average. But what happened? The 9 moving average now is like we're gonna add the 9 moving average. We're gonna add two. The 9 moving average itself, we have the 9 moving average, and we're gonna add the 21 moving average. How do they work for us? This the 9 moving average, which is the blue line, and the 21 moving average, we're gonna add it for you, which is the red line. So the 9 moving average is the smaller number, and the 21 is the bigger number. It's gonna be the two line. So how they work together? Whenever the small number is above the 21, stock is bullish. And now whenever the 21 now crossing above, for instance, whenever the 21 crossing above the blue, stock is bearish. So whenever the 21 is crossing above the blue, which is the 9 moving average, the stock is bearish. It's two line. So the small number, what you're gonna see, the small number, which is the 9 moving average, has to be above the red number, which is the 21 moving average, for the stock to be bullish. So we're gonna add them back to the chart. I'm gonna show you how to add them. Let's go back. Let's remove everything and go back. So the same thing that you do when you add your moving average. And also, by the way, for people that just come up, if you're gonna need to know how to use TradingView platform or the app, we got a class that we give you only for $100. We teach you how to use all those tools step by step in that class. And also in that class, also we teach you about all those candlesticks. What do they mean? How to use it? Because we have a master class, but we're not gonna put it there now for people because we're just taking care with the beginner people now. But before you start still trading, you need to know about how to use the TradingView. Now, you go back again to your indicators, and you're gonna add two lines there. You're gonna click on the line 2 times. The moving average exponential. You got it there, and you add it there. So from there, we got 2 lines. How you gonna do that? You go there. That's why you need to know how to use TradingView. So if you take my class for $100, teach you step by step, you will know all those tools there. Now, we already got the 9 moving average, which is the blue, and we're gonna go back there. We're gonna go look for the moving average, the 21 moving average. You see, we call it EMA. We got EMA there. So we're gonna look for it, and then you're gonna add it there, so you can have it there for you to use. If you've been come up, just let me know. Just share our live, and then we're gonna be with you. And then let me know if you're there, please. Thank you for joining us, Joshua. So we there, and then we teach you everything step by step. So how to use the TradingView. Remember, we have 9 moving average, and we're gonna do the 21 moving average. So what you can do there, you click on there on setting. From there, you look because once you add it, we have 2 9. We're gonna switch one to 21. We click on the input, and then you erase that. You put 21, and then you go to the style, because if we leave blue, you see now we got 2 lines there. You cannot leave both of them the same color. If you leave them the same color, you will be confusing because it's gonna be, you have to put one different color. So we're gonna put the 21 in yellow so you can differentiate them, and then you out. See, that's the way. And I teach you all those things in the class. Now, so how that works, as I told you, whenever you're gonna leave the shadow as it is now, so you can have a better understanding. Remember, before when we were talking about the 9 moving average only by themselves, we said whenever the price is below, whenever the price is below, whenever, let me just put this in yellow, whenever the price is below the 9 moving average, which is the blue line, remember the blue line is moving average, is the 9 moving average, and the yellow line is the 21. We got two lines there. So whenever the small number, which is the 9 moving average, is above the 21, stock is bullish. Now, whenever the 21 is crossing above the 9, stock is bearish. What you can see back there, you see those two lines, which is the 9 moving average, which is the blue, and the yellow, which is the 21. From there, stock is very, very bearish because first thing we see, we're going to look for the first check. First thing, the blue line, which is the 9 moving average, is above the price. The blue line is above the price. That's the first check to make sure it's a strong bearish. We call that bearish B. And then the second thing, we have second check. We have the 9 moving average, which is the small number. The 21, which is the big number, is above the 9 moving average. It cannot be above the 9 moving average because it's a bigger number. So that's the second check. And the third check, to make sure it's a strong bearish, we have those both lines, the blue and the yellow, which is the 21. Both of them are above the price. That's a big check. That gives you a strong sell signal, a sell-off. Because we got back there, the yellow line is crossing above. You see there, from there? The yellow line is crossing above the blue line, and also the blue line is in the yellow lines. Both of them are above the price. So if you sell, do a sell-off, you sell because that's called strong. We call it a strong sell-off. It's a very strong there, strong sell-off because we have three things there. We got the moving average is above the price, first check. And we got the 21, which is the big number, the big moving average is above the 9 moving average. That's the second check. And the third check, we have both lines, which is the 9 and the 20. Both of them are above the price. That's the third big strong check. So stock is going bearish. So if you do a sell, you sell. Because of that, you can see. I'm giving you that if you combine two lines. If you combine two lines, that's the way it works. Now, we're going to see if we can get a good, strong signal to buy. We're going to go back there now. We're done with the sell-off here. Back there, we're done with the sell-off. Because we got the three main character, the two main characteristic, the three main things that we need. We get it there for the sell-off. We got the 21 and the blue one. So we got the 21 is above the 9. That's a one character that's big. And we have the blue line is above the price. That's a big character. And also we got both lines, the 9 and 21, both of them are above the price. That's a strong one. We call that strong sell-off. Now we go back to the strong buy to see if we can get a strong buy. That's give you confirmation that you can do your buy or your sell. We go back there. See, that's the way you combine them. You remember last time I told you? From there, I will not get back to the trade. It's called that sideways. Whenever you say sideways means stock going like this. It doesn't go high, it doesn't go low that much. It just goes sideways. Stay one place. That's what happened there. Remember I told you that? After you sell off back there, and then you get out from there, for instance, I will stay out of the trade myself. Because what happened, you can see there, let me clean it and put it for you so what you can see there, you see the yellow line is above the blue line and stocks been stay one place. So from there, if you have to take a trade, don't even think about it there. We're out. Now, from there, you can come back from the trade. I'm going to show you. I'll take it slowly for you so you can understand. So from there, you can come back from the trade back here. Remember, I told you that before. You can come back here. You want me to clean it for you? Let me clean the shot so you can see it better now. Back here. I will add it quickly for you again. Go indicators, both line. There. And then you can look for it there. You can just slide it there. and then you change it. You put yellow there because you got 2 lines, and you put the 21 again, and then you just okay. So you see, as I've been told you again, I will stay out from the trade because we're done with this part. That was a sell-off here. So I will stay out from the trade. From there, I will come back in that scenario here. I will buy from that candle here. That's the best time to buy here. Because when you trade, you need to have patience to wait and watch your strategy, because you have to have your strategy. Those candles is one of the strategy that you can use when you trade. So what I will do, I will welcome everybody. Just share the live, let me know. So what I will do myself, I will come back there. Because why I will come back there? Because you're gonna see 3 characteristics again to make sure it's a strong buy. First thing, you see the blue line, which is the 9 moving average, is above the 9 moving average. That's a big check. That's a number 1 check. You're gonna look for the second check. We have now the second check, price, which is the candles are above moving average. That's a big check. And thirdly, to make it stronger, to be still in the trade, we have both line, which is the 21, and the 9 moving average, both of them are below the price. So that's a strong, for me, strong buy there. We call that strong buy, strong B. And I will still in the trade. I will still stay in the trade because price still above both line, the 21 and the 9. And from there, if you want from there, if I want from there, I can get out from there. Some people will get out there. Some people, as I told you before, they hope. They have hope in that moving average. Now you see, they merge here, like there. And some people will get out there too. But me, myself, I will get out from there. As soon as I see those 3 wet candles, I will not take chance. I will just get out. But some people, they still hoping, because they still hoping moving average still will be above the yellow line and price, but there, it still merged together. You get out. That's the way you use your moving average, my guys, by watching how it works. So remember, the 9 moving average, again, clean for you. I like to teach. I like to help people. So you clean moving average. The moving average is, you have what you call the 9 moving average versus the 21 moving average. As I told you, it's 2 lines that you've been adding to your shot. If you're not going to use 1 line, but most people use only 1 line. Some people don't like, they just add the 9 moving average. But I'm just teaching you if you're going to combine multiple line moving average. But there are plenty. We have what you call 100 moving average. We have 150 moving average. We have 200 moving. Those are for certain things. These are for long term. We're not going to go there. Now, whenever the 9 moving average is above the 21 moving average, stock is bullish. Whereas now, whenever the 21 moving average is above the 9 moving average, stock is bullish. That's the key. When you combine both moving average. If you like this video, let me know. Just share it, like it, share it to your friend. We do that every Friday, Sunday, Saturday, because we were there. I think Saturday, yesterday, we were live, but I think we have some issue with the microphone. So today we're good. If you need any cup like that, standard cup for exercise, go to my website. We get some cups. And also, if you need like yoga blocks, people that's doing exercise, we sell that. The website is www. I will put it there for you. You can help me that way. You help me to my website and you buy. They are very cheap. And we have what you call some discount. I will tap my website there. And you can visit my website. In the meantime, and that's a website we put the class for you. We offer this class for you, how to use the Trading View platform. Because if you're gonna trade, you need to know how to use the Trading View. I teach you step by step. You see how I take my time to teach you this thing, because I like to teach. That's the same way I teach you the whole tool that you see there, how to use Trading View. All those tools there step by step, you will be great by knowing that. So because if you're gonna trade, especially for beginner, and even though you that's been trading, if you don't have a platform, one of the app is TradingView. It give you all those big tools, and I teach you step by step how to use those tools. It's only $100. I will put the link. This class has been there sometimes, long time, and we've been selling a lot about it. And I was going to close it, but I got friends that love it. This is that's a good class. Just leave it in case some people need it. I just leave it for $100. And also in this class, we teach you about all those candlestick, how they react, what do they mean in the chart. If you want, I will put the link, and then you go and go there. You'll be there. Go to my bio, and you see the link there. Now, let's just go. If you understand, let me know. Let me erase everything back again. Remember, we're talking about the 9 moving average and the 21 moving average. Whenever the 9 moving average is above the 21, whenever the 9 moving average is above the 21, that's the 21, and that's the 9 moving average, for instance. So whenever the 9 moving average is above the 21, stock is bullish. Whereas whenever the 21 now cross above, whenever the 21 now cross above the 9, stock is bearish. And as I told you, and I've been teach you and showed you, I'm gonna add them again. You are just gonna do a review and add it, and you're gonna see for people that just come up. Hey, what's up, Jade? What's up, everybody? So, and we're gonna add the 9 moving average and the 21 again. Last time, before we move to the next step, we're gonna talk about the MACD. If we have time, we've been there some time. Now, add exponential, add it 2 times. So that means we have 2 lines. How are you gonna know that? By going there. If you go there, you're gonna see you have 2 lines there. You have the moving average and the 9 moving average. So if you just join us, let us know so we can give you some good clue there, because we teach you about the good stuff. So how to use the 9 moving average and the 21. For people that just come up, if you're gonna use, for instance, you're gonna use 1.9 moving average, the way it works, whenever the price is, let me just put this in yellow so you can see better. Whenever the price is below the 9 moving average and the 9 moving average line is above, again, repeat myself, stock is bearish. Whereas whenever the price now is crossing above the moving average, which is the moving average is the blue line, stock is bullish. That's the way it's been working sometime, my friend. Let me just see, because maybe it was not add there. Now we're gonna talk about the MACD now. Let me just go back there and add the MACD for you. Let me remove everything. It's already been added. I'm gonna show you how to add it. I added myself. Now, how are you gonna add the MACD now? We're done with the 9 moving average and the 21 moving average, if you understand. Now, the moving average, you do the same thing. You always go to indicators. Any indicators that you need to add or any strategy that you need to use, you go to indicators, you click there, and you type it. Either you type it there, you can put moving average, or you can just, it's already been there, you don't even go there. Whatever you need to do, you just add it, but that's in the class. So you look for moving average. The moving average, we call it moving average. MACD. You click there, the moving average, we call it moving average conversion divergence. You click on it, it's already been added to your chart. You see it? It's there. The moving average does the same thing as the moving average. The MACD does the same thing as the moving average. It's 2 lines. Remember, we have 2 lines of MACD in the MACD line. Right, it correct? So whenever we have 2 lines, these 2 lines are moving average and the signal line. So the blue line called the moving average, and the orange line called the signal line. So how it line. So how it the connection there. Are we back? Yep. Now, it's two things. Whenever MACD doing two things for you, it's like the same thing when you were adding the 9. And if we have time, we're going to combine all of them together. The MACD plus the 9 moving average is 21. But maybe I will do that next week because we've been there so long. Now, this two line there is the moving average. We have what you call moving average. The MACD line, MCD, the MACD line. And we have what you call the signal line. The signal line. The signal line. You see, we have the MACD and the signal line. So how they work? So the blue line, as you can see there, the blue line is the MACD, which is the blue line. And there is the signal line. The signal line is the orange line. Let's just take this one. That's the signal line. So how they act there? Whenever you got the blue line, which is the MACD line, the blue line here is above the signal line, stock is bullish. Stock is going bullish. Now, whenever there's the orange line, which is the signal line, crossing above the blue line, which is the MACD line, stock is bearish. I'm gonna teach you in the chart how you can compare them. Let's just clean our chart again so you don't confuse. I don't like you messed up. I clean it, and we're gonna add the MACD line again. How you add it to the chart. You go to indicators, and you go to moving average. We call it moving average convergence. Is MACD, MACD. So we call it he's there. MACD is moving average convergence divergence. You click on it, it's already been added to your chart, and you close this one. That's the MACD line. We're gonna see the same thing. We go back to the chart there. Let me just clean this one. We go back to the chart. We're gonna compare there to see when the stock was bearish and bullish. All right. So you see from there. Remember, I told you the MACD line. Whenever the MACD line is above the signal line, stock is bullish. Whenever now the signal line crossing above the MACD line, stock is bearish. From there, remember I told you the orange line is the signal line and the blue line is the MACD line. From there, stock is bearish. Why? Why? Because the signal line is above the MACD line. You're gonna compare to the chart. Okay. You're gonna compare to the chart. You're gonna see now from there. See, if I will sell, for instance, we're gonna stay from back here. You're gonna see there. We're gonna stay from there. Stock there. We're gonna do first the bullish because we are in the bullish and we are in the bullish side here. We are in the bearish side here. We got two things that's give you. We got the uptrend and we have the downtrend here. So we're gonna see how we can compare the MACD with them. From there, if you're gonna place a trade to buy, you can buy from the MACD there because remember I told you the blue line, which is the MACD line, whenever the blue line, which is the MACD line, is above, the MACD line is the blue line, and the orange line is the signal line. So now, whenever the blue line is above the MACD line, the signal line, stock is bullish. And when you place your trade, you place it there. If I want, I can add the moving average for you. You're gonna see it does the same thing. Let me just add the moving average because you already know about the moving average. I think you understand it well. Let's add everything together. Now let me finish with this and then I don't want to confuse you. Now, we got there. If you place your trade back here, I will place my trade back here. Some people place it back there. You know why? Because the moving average start crossing. It was crossing there. Some people will take it from there. Let me see. Let me just move the shot a little bit so you can see better. Yeah, some people will take the trade. Yep. Some people will take the trade back there. You see? Some people will take the trade back there. If you, you will take the trade as soon as we call that is break all the way there. I will take my trade back there from that candle, because you know what? Because the blue line, which is the MACD line, is crossing above. You see the blue line there is above the signal line. So if you match them together, when you place your trade, you buy there on that candle, and then if you align them with the MACD, you put the line there. You see the MACD line cross above. That's the way you watch it. And then stock still above, going up, and MACD still, which is the blue line, still above the orange line. Now you can sell. Where you can sell? You can sell back there. You see here, you can start selling back there. You can be in the trade. You see, all this, you're still in the trade after that, because stock is been above, and then you can sell. I remember I told you can sell. I will sell from that candle, and some people will sell there, as I told you before. Remember that? Because now you see the signal line. If you align them there, from there, you see the orange line is crossing above the MACD. Stock is bearish. Stock going down. See, because the orange line is still down. It's still above the blue line. Simple as it is. I'm gonna erase. I'm gonna add the moving average with it for you. I'll just give you that bonus. If you like this video, just tell me if everything's clear. If you understand, you're gonna add everything together. I'm gonna add the MACD and the moving average. You're gonna see how they act together. Some people like to put everything together. If you're gonna add the moving average, the 9 moving average plus the MACD together to make sure your trade is strong, you can do that. And also you can add the 21, but I'm not gonna add the 21. I just add again. You go to indicators. You go there again to indicators. I'm gonna add the 9 moving average first, which is the blue line. It's add to your shot. You see how it works? Now we're gonna add the MACD. Go to indicators. I've just teach you because for beginners. So how you do? And you're gonna add now the MACD, which is the moving average convergence divergence. You add it there, and it's been plotted to your shot. To your shot. And I told guys again, like yesterday, I got 5 minutes left because we've been there for some times. All right. Yeah, I don't know if you see me because TikTok says I still have some time, 5 minutes left. What? All right. So what we have there, we have the 9 movie. I've been told I've been there for more than 1 hour because I like to teach. I like to teach my people. Now we have the 9 moving average. Remember, we have the 9 moving average there, and also we have the MACD line. We're gonna see how they work together. Remember, I told you again, as I told you, if you're gonna place the trade, let me just put the shot in a bit for you can see. If you're gonna place the trade, if you bought there, for instance, you bought there, we're gonna match them together. The MACD line, whenever the MACD line, the blue line, is above the signal line, that's a bullish signal. And whenever now the 9 moving average is below the price, remember I told you that in the beginning, stock is bullish. So let's see, we have 3 big check there. First thing, I will place my trade there. I will buy from this candle right there. See this green candle? I will put a place B there. I will buy. You know why? Because I already see that we got the 3 big check there. First thing, I got the moving average there, which is below the price. Remember that? The price represent candles because people use candles most of the time because it has what's called price action in it. So I will place my trade back there from those candles there because first thing, we have the moving average is below the price. That's the first check. That's give me power to buy. The second check, I can align there the moving average plus the price to my MACD line. We have, remember I told you the blue line, which is the MACD line, is above the signal line. And if we align them together, you see that it goes together. That's the second big check. My MACD line is above the signal line. That's a big, strong thing to make me sure I will place my trade back there. And lastly, the price again. The price is above, which is the candles is above the moving average. That's my third check. I will stay in the trade. In the trade, as soon as now I can see there's a switch, I will get out. How I'm gonna know there's a switch? Because now, first thing, from there, the moving average start crossing. I will sell out there. I will just get out. After placing my trade, after bought back there, I remember I told you we bought back there, all the way down there, and then we'll stay in the trade because the MACD line, the moving average line, is below the price. I will stay in the trade, and also I got guarantee that that's my MACD line is still above the signal line, so that's a strong be in the trade. Good after bought. But now I will switch my thing. I will sell out and get out from the trade. The reason why, the moving average now is crossed above. Remember I told you, whenever the moving average is above the price, it's bearish. Start going down. So the moving average there is above. We got one big check that makes sure I'm get out. First thing I got, the moving average is above the price. That's a one best big check. And also we got now the MACD line, the signal line, which is the orange line. Remember I told you, whenever the orange line, which is the signal line, is above the MACD line, is bearish. I got the signal line, which is the orange line now, is crossing. From there, the blue line was above, which is the MACD line, and back there now, the signal line now is crossing above. You see, stock is bearish. Stock is bearish there. You see, and I will get out because signal line, that's a big check, and the third strong check, that's how I'm stronger. Price still below the moving average. That's a big check. So I will get out, and when I will come back again, I'm gonna show you. Let's just move it back there. If you understand, I'm gonna move the chart back there. You see, all the way there. Remember I told you from there, I will never place a trade because it's sideways. From that cycle there, I will still out if I sold back there when I told you back there when I sold over there, and I will stay out of the trade, and I can come back again back there. Because here I will go, let's make sure I will go back from there. I will place it on the buy again, because now what happened? The blue line, which is the signal line, which is the moving average, is below the price. That's a big check. And secondly, price is still above moving average. That's a second big check. That's I can still in the trade. And thirdly, I got the MACD line crossing above. We see from there was the signal line was above, and from back here now, the MACD line, which is the blue line, start crossing above. It cross. As long as it's crossed above, people will buy there. So people will buy from there, but I will stay confirm there, wait for confirmation. But it's crossed there, and still the blue line, which is the MACD line, is still above. And I will sell what there. See, because my signal line cross, I will sell. Some people will sell from this candle there, but I will sell me myself there because it start getting crazy there. You see, that's the way it works, guy. And then when you place your signal or your strategy, and we have, let me clean it for you again. Clean everything. That's the way it acts. So for people that don't trade, people use their own strategy. Some people use what you call resistance and let me just move that. But we're not gonna go there. Another day we do that for you. Another day we can do that. Let me see what I can do for you. Show you something. Okay. Some people use what you call strategy resistance and support. How that works? Resistance support is like a line they put, and support is on the line they add there. We call that support there. Yeah. And then people buy at the support. Some people will buy there at the support. Some people buy at the support. Some people will do buy at the support and sell at the resistance. But this is something I will teach you another day. And then some people use this moving average, the 9 and the 21 and MACD. So we have all those combinations. So people, we out of time. And then thank you for joining me. So don't forget to go to our website, www.ryfestores.com. We got some good t-shirt, hat, and also we got what we call the yoga blocks. And we add the class. There's a class there. You can see, you will see the class in U-Trainers to get the class from the trading view. Is only $100. So I teach you step by step how to do it, to use trading view platform app. And we teach you also about what you call those candlestick. It was hairy. Don't forget, whenever I'm online, you're gonna be joining me and we'll be there together again. Thank you guys and see you, and thank you for being with me today.